For the ECB, for other central banks, the key risk remains, I think, inflation. The assumption here is that will continue to slow in a bumpy fashion, in a gradual fashion, but that this inflation trend is in place. And that's our view as well. And on the basis of this view, we do expect the ECB to continue its easing cycle. But inflation might surprise to the upside, might be stickier than we all assume, and this might get in the way of central banks continuing to ease monetary conditions.
The central bankers are having to remain somewhat dynamic because they're one stage looking at this side, which is the fading growth story, and then the next minute they're jumping back to the other side looking at the inflation story that's not playing ball. But I want to pick up on the growth concerns because that's where we were at a couple of months ago. A lot of the central bankers were concerned that they were going to be causing economic scarring if they didn't start to get going with reducing interest rates. How resilient is growth looking like if we keep interest rates where they are?
I think there are signs of the economy. In the US, if I look at the US, the economy is cooling off. If I look at the Eurozone, actually, I think we have seen a stagnation, effectively, and now a recovery. Now, there is no sense from the recent data this recovery is accelerating, gaining momentum, but I think growth will probably be around trend. And this can be combined with some rebalancing of the labor market. So I don't think the situation is so kind of negative, if you want. But of course, the assumption underlying this forecast is that the easing in monetary conditions materializes, is already there in the expectations. A shock might change this, and if conditions remain tight as current policy rates suggest, then of course we would have a deterioration in growth. I think so. It's a bit circular here. And so the expectations inflation moves lower, allowing central bank to ease, is a precondition for these growth rates to be maintained.
I want to bring up the signalling that you got from the ECB versus the Fed, because it's quite different. So the Fed, it seems to be great mystery as to when we're going to get going, if we get going, how much we're going to get from the Fed. The dots keep changing. The market was thinking one thing and then it was a mile away from where the Fed was at. ECB seems to be a little bit different. It seems to be closely taking the market with them. Would you agree with that assumption?
I think actually there are a bit more parallels than differences at this stage. I mean, if I look at the latest speech from Powell, for example, if I take what Governor Waller said yesterday, getting closer, I think the message is a disinflation trend is in place. They are reasonably confident this will continue. They want a bit more evidence, which is not different from the data dependence of the ECB in kind of setting policy for the next few months. So both central banks are saying it's working, but we want a bit more evidence. That's exactly the case to continue in the case of the ECB and to start this in cycle for the Fed.